Yeah, awesome. Thank you, Jeanette. I really
Yeah.
appreciate it. Thank you, everyone, for being here. Definitely want to echo Jeanette's comments. I think, as I always like to say, if you're making time out of your Saturday, particularly in the summer, you are definitely serious about trying to make this trading and or investing business work for you. So, what I would like to take you through today is not only are we going to look at the summer market, what we think the opportunities are. You can see a little bit by the title of it, some of the things we're going to talk about. But I also want to walk you through how you can take advantage of what the big, like, super smart algorithms are doing in the market, because a lot of people get tricked out. Like, for example, last week was a classic week where a lot of people got tricked out by all those by those algorithms. I'm going to show you guys how you can take and trade with them. So we'll talk about this here in just a second. This is your truly literally sitting at my desk right now. Um, Father, trader, portfolio manager. I guess it does go in that order sometimes, even though I mostly do sit at my desk. But being dad and family guy and husband does take a lot of time, as some of you guys may know. Um, but what I really want to talk about here is I want to make sure that when we look at the markets here, we understand that it's important not to make things too complicated, to stop looking at all that conflicting data out there and really eliminate the noise. And the only way we can do that is by sticking to a process. How many of you feel like there's too much information out there that you get confused by? Anyone out there kind of fall into that camp? There's so much data, so much noise, so much news flow coming through all the different news sources. I think a lot of people get kind of thrown off by that, and quite frankly, understandably so. And so what tends to happen is that, and I wonder if you guys have noticed this, once everyone's on the same side of a trade, it tends to go the other way. Have you guys ever noticed that? Like, I have an example for you here that I'd like to show you. This is a company or stock called Oracle, and this was last year. And you can see pretty much everyone had thrown in the towel. Everyone was bearish the stock, and this did coincide, to be fair, with the broader market meltdown last week. But just as everyone was bearish and no one really ever thought the stock could go higher anytime soon, that's when the algorithms start to come in and just basically, you know, make you look very silly. And they don't do this personally to you, but that's just what they do. They're very smart. They sniff around. They can see how people are positioned. And so, how many have ever fallen into that, right? Where you kind of get into a trade, and then all of a sudden, just when you think it's good for you, the market starts ripping in the other direction. And it's because the algorithms are sniffing out how investor positioning is looking. And we'll go much more into this here in just a minute. And I'll show you how we can do this, and have a little tool you guys can use as well to start helping you sniffing out when the algorithms are about to go the other direction. So what if there was a way to quickly and efficiently find when a trade is getting very crowded? Because that's what the algorithms are doing. Just they notice when everyone's getting fearful, when everyone's short or bearish, and then they go the other direction and they rip it right in your face. Or the other way around, when everyone's super bullish and everyone's invested, they notice that, and that's when they start selling, and that's when things start going lower. So we're going to explore this here in just a few minutes. So I want to make sure uh, you guys are. It's funny here. Don says he has an uncanny ability to pick tops and bottoms from the wrong side, and so if that's something that you guys can identify with, like Don is saying, I think this is going to be something that you really want to pay attention to. We're going to get back to this in just a minute, but I do want to spend just a little bit of time here going right into what's happening into the market right now. So you guys may have noticed the word inflation out there is something that's on every news headline seemingly, and for the right reason. Of course, we do have inflation. We're coming out of almost like a post-war like period, if you will, from an economic perspective. Oil is rallying, and we think that energy stocks should follow. So this is sort of like a bit of a blueprint, if you will, for the summer market, and quite frankly, I think beyond. So if you look at something like consumer inflation expectation, what's really interesting is that even though people have a higher inflation expectation, the market is actually not really pricing that in to the extent that one would think the market would be pricing it in. And I think a lot of it has to do with kind of the messaging coming out of the central banks. but we do know that the central banks tend to be kind of lagging the real data. Just it's kind of just how they're set up to do things, for better or for worse. But you look at inflation expectations, anything from home prices to food to rent, all pointing higher. And you look at, it's not just me saying this, you look at big hedge fund managers that are saying, of course we're going to have inflation when you have 34% more money in the system than we did 14 months ago, right? It's a natural thing. It's likely and very likely to happen. The question, of course, is how long and persistent and how sharp is that inflation. But you don't have to have inflation for a very long time for the market to give you wonderful opportunities, and that's really what this is all about. So like I said a minute ago, investors don't yet actually believe in this longer lasting inflation, nor are they positioned for it. Here's the five-year forward inflation rate. If you don't know what that is, don't worry about it. It sounds fancy. It's not that fancy. It just means what's people's expectation of inflation in 5 years for the following 5 years. And you can see it really hasn't changed a heck of a lot. But what we do think is regardless of how long inflation is here for, we do know that oil, from both a demand and a supply perspective, does look like it could go higher. It's already up 50+% year to date. We think oil could tickle the 80 mark in the not too distant future. Wouldn't be surprised to see $100 or so. This is on WTI over the next few quarters or so is not at all unreasonable. But what we also know is that oil is quite nicely correlated with the 5-year bond yield. This is the Treasury note 5-year yield, and you can see that. And I should have marked this. It's my bad. But the 5-year yield of the U.S. Treasury note is the orange line, the one that's pointing up here, the one I'm circling. And excuse me, that's oil prices. My apologies. Oil price and bond yields are here. So I think bond yields are down here, and this oil price is up here. I should have marked this. So I think what the oil market is telling us is that yields are likely going to push higher. And I think at the same time, what hasn't been reflected in the market either, and this is something I've been talking about to a lot of the sort of hedge fundy kind of outfits and family offices for the past few months, is that we think we are likely going to see a squeeze in the oil and energy related stocks. We've seen a big move in oil. We continue to see a good move in oil. We think it'll go higher, although it's not directional, not linear, so to speak. There will be bumps in the road. But the oil stocks are actually the ones we think there's a lot of upside here, because I think a lot of people haven't really jumped on that train. And so what I did here is I took a chart and I took one of the ETFs that represents oil stocks. It's the OIH. I divided it by the SPY, which is the S&P 500 tracking ETF, and you can see you end up in this sort of bottoming pattern. So in the relative terms, oil stocks look really giddy to start breaking out. And if you look at them in absolute terms, which is this next chart right here, you can see they actually already have broken a multi-year downtrend and could really start to squeeze higher. I wouldn't be surprised if the OIH ETFs, rips right into the mid 300s, maybe 400s, possibly much higher this year. So there's a lot of potential upside. But the biggest thing of all is investor positioning, and I alluded to it a little bit here a minute ago, but I want to just talk about this a bit more. This is really important. So after a lengthy 5 to 10 year bear market in energy and energy stocks, most investors are significantly underinvested in that energy sector of stocks. So the way you can think about this is that typically the energy sector makes up roughly between 6 and 7% of the S&P 500. Right now, energy stocks make up closer to 3.5% of that, so of the S&P, so roughly about half of what the historical average has been. We think if we only even just get to 6%, which is on the low end of the long-term sort of average, you're going to have a massive rally in energy stocks. So again, there's a demand, a supply story, an economic story to this, and ultimately an investor positioning story. That's why we like this a lot. And so the more that the inflation trade and energy stocks pushes higher, the more investors will be literally forced into upping their allocations into energy stocks. They don't really have much of a choice there. Even if they were just indexers, they have to literally just adapt to that. So that's really, really important. So that's a really important story to understand. I hope this is giving you some insight into what we're seeing right now, why we're seeing it. And again, I think it's important to understand we're not calling for massively long inflation. In fact, I don't think inflation is going to be here for that long, but it doesn't require a lot in order for the for something like oil stocks to really start rallying. Inflation doesn't have to be here forever and doesn't have to be 5% a year. So that's an important point. So let's get back to the other part that I alluded to before. The best traders have a simple but repeatable process. And what we know is that a lot of people have a process that allows them to essentially always look through the same type of data, and by so doing, being able to not get sidetracked by all that different news flow that we talked about before that tends to throw people off. So what we're going to look at here is a process that has the power to forever change the way that you look at the financial markets. And at the very core of all this is the fact that a lot of us, in fact, most of us, are very visually oriented when it comes to learning stuff, right? Academic studies point to about 60% of the population being visual learners. Actually, in my empirical research we've done, it's closer to 70 to 80%. So the vast majority of you are visually, have an easier time learning visually than just looking at a bunch of numbers basically on a spreadsheet. And the reason why that's good news is because you can use something like a candlestick. And I want to quickly just bring this up front here. What we're about to show you here is not a webinar or a presentation on just candlesticks. It's about something much more powerful. So even if you think you know candlesticks, I think this will be very interesting for you to understand. So there's a lot of different types of candlesticks, and people have gotten into this habit out there of just learning these names of candlesticks. How many people in here use candlesticks as part of your analysis for trading or for investing? Yeah, and how many of you think there's too many different candlesticks out there? You can see I've got some of them here. There's all sorts of funny or maybe interesting names, but for the most part, these names are quite useless. In fact, they're totally useless. And the reality is that most of these candlestick patterns don't really show up very often. In fact, some of them show up just about never. So it becomes an exercise of that leads to more confusion than giving you more clarity. So what I would like to show you here is how we can find out when the algorithms in the market are coming in and are about to go against how most investors are positioned for. And it has a lot to do by learning one simple pattern, but one very visual and powerful pattern that we can detect using candlesticks. So whether you've used candlesticks before or you've never seen it before, this is a very simple and visual exercise that you can do every day in the market to find out where the algorithms are already coming in or are about to potentially come in and start ripping the market in one direction or another. And so a lot of it has to do with understanding that when you look at the market, using in this case candlesticks, it's really powerful because what you can do is you can visually detect how investors are positioned and thereby basically sniff out again, what is likely to happen or what algorithms are doing or are just about to do. So this all leads to decision making without emotions, and it all comes down to looking at one simple and repeatable pattern. So I want you to go through this exercise with me since you've committed to taking a little bit of time on the Saturday, and really start to ingrain this pattern in your brain. So to the point that you can literally on Monday when the markets open up again, you can literally start looking for this pattern as if you had done it all your life. And the pattern is like a 1-2 punch, and it has to do with getting to the point where you have, let's say in this case, seller exhaustion, and then you have what we call follow through buying. It's the buying candle, and then it tends to go off to the races. And we're going to go through a whole bunch of different examples here right now, so that by the end of this, over the next couple of minutes, this pattern should really be ingrained in your brain so that you understand it and you can start looking for it automatically come Monday when the market opens again. So we're going to look at the bullish version of this example. The bearish version is just the opposite of it. But let's look at how this works. So you have a downtrend, and then you have this hammer candle, and what happens at this hammer candle is that you can see that the investor positioning has been very bearish. Everyone's bearish. No one wants to buy this stock. Everyone's leaning in one direction, and the algorithms are starting to come in. And we can see that because the algorithms are starting to pick up the slack when the volume dries up and everyone is disinterested in the stock. And then they come through with this 1-2 punch with the buying candle and really start to squeeze the market higher. So then other algorithms or investors that want to take part of it or have to take part of it are essentially forced to come into the market. People that are short have to cover, and it leads to big moves to the upside. So let's look at this again over and over again over the next few charts. Downtrend, hammer candle, fall through buying, and it squeezes it to the upside. That's one of the most powerful patterns that I can show you, because that's where the algorithms are coming in and visually are telling us what they're actually doing. Again, what we're looking for is that hammer candle, that exhaustion selling, because that's where the algorithms start coming in. They come in at this candle here, or even here, they come in and they're picking up where the rest of us have basically given up on the stock or in the ETF or in the futures contract or whatever the instrument you're looking at. And then they squeeze it higher with follow through buying as the rest of the market has to catch up and get back into the name. Let's take a look at another one here. Downtrend, hammer candle, and then boom. Can you guys see the hammer candle? Excuse me, the follow through buying candle? It's right there. And then the market gets squeezed higher, right? How many people have seen this happen before, where you start getting into a stock or it's an ETF or whatever you're trading or investing in, and just when you think the market's about to go down further, it starts squeezing in the other direction, right? But visibly you can see it by looking at the pattern. If you see this pattern, you better get on board, right? And again, the inverse of this pattern happens at tops, and I'll show you some of that here in just a few minutes. And it's a very powerful pattern to sniff out what's happening and what the algorithms are doing. And you can jump on the back of that. So how nice would it be to no longer fall prey to these algorithms and actually trade with them? You know, jump on their backs. Wouldn't that be a nice thing to do? Again, downtrend, hammer candle. Can you guys see it? It's right there. Follow through buying, and then you have that reversal, and it squeezes the market higher very, very forcefully. Now, what's very important about this pattern is that the follow through buying candle happens right after the hammer candle, after that initial exhaustion. And that's because what we want to see is that on this follow through buying candle, we want to make sure that the algorithms are actually committing to what they told us they were doing on this day. If they're not committing us right away the next day, then we can't trust it. Now, you can still get follow through buying candles up to 2 or 3 days later, and you can see in this case you would have made some money, but the real powerful change of trend for X period of time happens when the algorithms tell us visibly on the chart that they're coming in and they're squeezing it higher right the very next day, right? That's really, really important. This works in every single time frame, and I'll talk about this in just a minute. So when the follow through buying candle doesn't happen right after the hammer candle, we call that a failed reversal. Again, it doesn't mean it's going to lose money right away. In fact, it could definitely work, and you can see in this case you still would have worked, you would have made money. It just didn't run for a very long time. Let's look at another example here. Again, downtrend, hammer candle, and again, we have a follow through buying candle, but it doesn't come until 2 days after the hammer candle. And that's because the algorithms didn't commit to the extent that we would have wanted them to on that very next day. Again, you still could have made money, probably would have made money, or certainly wouldn't have lost a lot of money on this trade, but you can see the trade didn't last very long. So that's really important. Let's look at another few examples. Downtrend, you guys can see the hammer candle right down there very, very prominently. Very strong follow through buying candle. The stronger that follow through buying candle is, the more forceful, the more powerful, and ultimately the more profitable. I mean, you can literally get explosively profitable trades out of this pattern as it starts to squeeze higher, and then the reversal is to the upside. Give me a quick yes in the chat box again if this is starting to resonate. Yeah, I know it's a Saturday, and for some of you guys it's early in the day, but I want to make sure we're on the same page so you can see not only how it works, but that it makes sense, right? The algorithms are telling us. So every market participant of any size, whether it's an institutional investor or particularly algorithms, a lot of algorithms feed on other algorithms, right? So these things are like they're like a herd. They're like the Reddit group, if you will. They really leave massively obvious and clear footprints in the market every single day, and that's what we're looking for with this pattern. Again, look at another one: downtrend, hammer candle, follow through buying, and off to the races. Right? Same pattern, same pattern. Now, one of the questions that you guys might be asking yourself right now is, Serge, this is nice, but where do you place your stop? Because surely this isn't going to work 100% of the time. And that's exactly correct. This does not work 100% of the time. Absolutely not. But it works a lot of the time, like 80% of the time. And that's more than enough to make a ton of money with this. So let's think about this. If the algorithms told us that this is where they're buying, right? This is their reference point of buying, because this is where the exhaustion selling happened. This is where the retail investor, or even other investors generally stopped caring about this stock. They gave up, they shorted it, they sold it, whatever. If this is where the volume dried up and no one cared anymore, and this is where algorithms bought, what do you think algorithms will do if this line in the sand, this reference point, gets breached? If the market were to turn around and get broken below there, what do you think? Who can tell me, what are your thoughts? What do you think algos are going to do if they bought here and this point no longer holds in terms of support? Right, they're going to sell. Exactly, they're going to sell anything they bought, and which is going to then perpetuate the energy from the upside to the downside. So that's actually the other nice thing about this. Not only do we have a very clear reference point to where to get out, we also know that it's likely that as algorithms start to get out of this, the move is going to start perpetuating to the downside. Isn't that cool? Now, let's look at a couple more things. Again, downtrend, hammer candle, buying candle, and moves on. The greatest thing about this is that this pattern works and repeats itself on all time frames. It works on investing time frames like multi-month, multi-year, multi-quarter. It works on your swing trading time frames. Some of you guys might be swing traders, multi-day, multi-week positions. And of course, if you're a day trader, this works as well. The algorithms work in all time frames. And of course, you're wondering, Serge, this is nice, but does it work for the asset I'm trading? This definitely happens in stocks all the time. It happens in ETFs. It works in options, clearly. That's just a derivative of those. And it works in futures and any other market. I am even used to use this even in credit default swaps, if you know what that is. So it definitely works in any market. And just to give you an example, here is an example on the Russell 2000 IWM on a long-term weekly chart, multi-year chart. You can see the pattern playing itself out. The Russell ended up going on like a 50, or I think it was a double, like 100% run, I think it was. It was just massive, right? The same pattern playing out. Here it is on a daily chart. You can see the exhaustion selling, follow through buying, and the NASDAQ 100 explodes to the upside. Another one here is in United Airlines. You can see exhaustion selling, follow through buying, and boom, off to the races. Again, it's the same pattern over and over again. Here's another example. It could be on the daily chart for swing trading: sell off, exhaustion selling, follow through buying, boom, up to the sorry, excuse me, this is a day trading chart. This is an intraday chart. This is a 5-minute chart of the S&P 500. Here's another one, the SMH ETF, just for example. You can see what happened here. The stock gapped down at the open. Very quickly, everyone got exhausted. Algorithms came in, started squeezing the market higher, and we had a rip-roaring rally, squeezing it into everyone's face. And you can see what some of the people that are doing this already are saying. No, this guy made 9% in less than 30 minutes. This guy made $800 in 6 minutes. Some of these people are using for intraday, obviously. This guy made something in United Airlines, 40%, and so on and so forth. So this is a very, very powerful way to look at jumping on the back of what the algorithms are doing. Now, if you want to get even more pop in some of these trades, the good news is, best of all, you can use very simple moving averages or trend lines to get even more pop, even more strong, forceful moves. If you get one of these reversals taking place at a major trend line or a major support line or a major moving average, that's where you have even more support. right? So that's the beauty of all this. But before we continue, because I do want to go into the current market, I know the market here is closed today, obviously, on the Saturday, but I do want to give you guys a chance to give me ticker symbols in just a minute so you guys can see that I'm not just making this up, that it actually does work in the current market as well. But before we do that, I do have one very important little message I want to come across, want to bring across, I should say, and that has to do with by not making this one major mistake. What I've noticed is a lot of people fall into this pattern where they just use a few stocks or a couple of futures contracts and they take every single signal that they get. That's a really bad strategy. And the reality is that real high probability signals only show up every so often in any given stock, index, currency, or commodity. So this is a very low probability strategy. Don't do that. What I would highly encourage you to do is find a highly profitable pattern such as the one here that we're using that allows you to jump on the back of these Wall Street powerful algorithms and really start to scan for that pattern across, let's say, the universe of equities, ETFs, futures, whatever it is that you want to trade, and take the signals that appear. And the reason why is, think about hedge funds. What is a hedge fund? Well, a hedge fund is set up in the way it is so that it can take advantage of basically any market in any direction, right? Because they understand that you're going to get a great signal, a great opportunity, every day, every week, every month, every quarter, every year, but it's almost never going to happen in the same stock or in the same ETF or the same futures contract every single day, month, quarter, or year, right? So that's really, really important. Can I get a quick yes if that makes sense? This is really, really, truly important to understand. Yeah? A couple more yeses. It's really difficult for me to overstate the importance of this. So please understand that. And I think a lot of people fall into this trap very quickly as they start to just become lazy and just look at one stock or one futures contract. And in reality, it's just not really how the odds would be in your favor. Now, let's talk about bullish and bearish reversals recap, and then I'm going to show you guys how we can find this pattern. I have a little tool you guys can use to find these opportunities every day, week, month, and year. The strong bullish and bearish reversals. Again, it's where the buyers or sellers get exhausted. It's where the last of the buyers buy, the last of the sellers sell, and then the algorithms come in and they take the opposite. They take the other side of that, and that's where you get squeezed, you lose. But if you can jump on top of the algorithms, on top of this trend reversal, you are going to be in much better shape. So I used to not really be a believer in indicators and stuff. I remember when I used to work at JP Morgan as an investment banker, we always had people come in, with their magical unicorn indicators, and I never really saw anything that but what I ended up doing is after a project was given to me at JP Morgan, was between a couple of managing directors and me, and we were looking for reversal patterns in bond prices, particularly in bond yields actually, and credit default swaps. And once I ended up quitting the sell side, going to the buy side, and ultimately started my own company, I asked one of my good friends to program this for ourselves. And so we did this. It was a long project. I think it was 5 years almost. And we have these beautiful buy and sell signals that sniffs out this exact pattern that I just talked about here for the past 25-30 minutes. And you can see some of the charts. We're going to go into the live chart here, right, the live market right now. But what you can see here is sell signal, and this happened to be Tesla, and then the market corrected 18% to the downside, right? That's where the algorithms came in and they started to take the other side of everyone that was bullishly positioned. Here, sell signal in this stock, buy signal in this stock, sell signal, each time making 13, 14, 15%. Or here in this stock, Starbucks, classic bearish reversal, algorithms sniffed out that people were no longer long the stock, were no longer interested in selling it, and then boom, the stock went down. So IMAX here, strong bullish reversal. You guys can see how it works. So what I'd like to do is I'd like to take a few minutes to go into the current market. Again, I know the market's closed here right now, but let's go through this exercise. If you guys want to give me some ticker symbols that we can again go through, and I'll bring them up here live. And I will maybe just quickly call out your name so you guys know that I'm not just making it up. That would be great. And we can look at different time frames. We can look at daily time frames, weekly, intraday, whatever you guys want. If you want to maybe clarify what the time frame is you want to look at, that might be helpful. So the first one here comes from Colin, and he wants to look at Roku. Here is Roku. You guys can see the pattern just happened a few days ago. Hammer candle, follow through buying. We got a buy signal, and then the stock exploded higher 16% over the past few days. Colin, that's for you. And again, if you give us a ticker, maybe let us know what time frame you're interested in. Type in daily or 5-minute or weekly or whatever it is you want to look at. Do you see that, how that works, Colin? You see the algorithm come in, give us a buy signal, and boom, it was off to the races, right? Really, really powerful 16% rally. Okay, cool. Let's have a look at another one. And this one is coming from, let me just put, this one's coming from, it was Amazon, and it's from Deck. Cool name. We actually just got one on Amazon, believe it or not. Literally just now, just yesterday, just got one. So let's see how this one holds up. This is just happening right now. Okay. Deck, that's on a daily time frame. Next one is going to be on NIO. Oops, NIO. Type NIO. Okay, sorry, hold on, bring this over. NIO, here's NIO. We had, the last signal we had was here in April, and you can see NIO ended up dropping 25%. And again, think about what happened. Think about what your trading would look like if you were able to sniff out when the algorithms were going to start going the other direction. I guarantee you everyone was bullish NIO in late April, and the algorithms came in, they started selling the market. The indicator gave us a sell signal, the stock ended up dropping 27, 25%, right? How nice would it have been to go short or at least close your long position as opposed to getting, coming into losses? You guys like this? Can you see how that works? Yeah. Let's take another one. SPCE, excuse me. That's Virgin Galactic. All right. SPCE. This stock, Jesus, this thing had a huge rally, 40% almost yesterday. Okay. So let's spend a minute. This is, I didn't even know this. So this is interesting. So check this out. So stellar exhaustion, the algorithms came in, bought the stock, follow through buying on June 22nd. We got a buy signal on June 23rd. And if you would have bought it on June 23rd, well, yesterday the stock rallied almost 39%. You guys like this? Yes, Amazon was a short sell signal, Sherry. Yes. So this I can't make this up. This just happened. We got a buy signal with the algorithm on June 23rd. Boom. Stock is up. I mean, of course, this is not typical. I'm not going to say the stock's going to rally 40% every time, but since you guys are asking for the ticker, this one just came up. Yeah. Okay. Cool. How about let's look at an ETF. Let's see if anyone's in ETF. Okay, IWM. That's the Russell 2000. Let me show you this one. Excuse me. Where are we? Russell 2000. It's been a little bit choppy, but there's plenty of signals here. Let's start off with March, buy signal, then the Russell rallied 8%. A little small sell signal. Another buy signal, the Russell rallied 3-4%. A sell signal here, the Russell fell 7%. Then we had a sell signal here, but notice no follow through selling, right? So it wasn't qualified, wouldn't have entered it, and that's it. So that's been very, very profitable. If all you did is trade the signals in the Russell 2000 since March, you would have done very well, if that's all you did. You guys see how this works? Yep. Okay, great. TLT, sure. TLT, let's have a look at it. Here's TLT. I think that's what you meant, right? John David. We had a buy signal here. Actually, first we had a sell signal here that got you out of the long, right? TLT dropped, and then we just got a buy signal, and TLT had a big rally over the past couple of weeks. So that's been a nice signal. Who wants to look up any intraday stuff? Oh, ARC ETFs. Okay, Let's have a look at the ARK ETFs, sure. ARKW. Here's ARKW, that's the Kathy Wood stuff, right? ARKW. Let's go look at all the signals since March. Sell signal, ARK dropped 20%. Buy signal, ARK rallied, whatever, 13, 14%. Another buy signal, ARK rallied 10%. Sell signal, well, down 21%, and we've had buy signals since June 8th, and since then, ARK is up 9%. Intraday, okay, let's look at a couple intraday. Let's see, intraday, ES on a 15-minute chart is what you're saying, right? Okay. ES on a 15-minute chart. So this is literally just Friday, so yesterday. Let's have a look at these. This is a 15-minute chart, ES, sell signal, buy signal, mini sell signal with no follow through selling, wouldn't have taken it, buy signal right into the close. M2K, that's the Russell 2000, right? This is, okay, here. This is literally just the last few minutes of trading on Friday, so yesterday, but just so you guys can see, algorithms came in, pushed the market higher, 40 basis points. Yep. Yes, it works in all time frames, as you can see, absolutely. How about, let me see. I want to make sure we take tickers, you guys know. Zoom, just while we're here on the intraday chart, 15-minute Zoom. On Thursday, beautiful sell signal, and then a buy signal on Friday afternoon, rallied 1% into the close. Okay, more intraday, sure. Let's have a look at Tesla. I see some people asking Tesla. Okay. Okay, Tesla here. Intraday, oh, 5-minute chart. Okay, let me give you a 5-minute chart. So I have to keep going back and forth because I have a different different resolution on my other screen. Otherwise, it all messes up, and we don't want that. Here's Tesla on a 5-minute chart intraday. Buy signal right at the open. Another buy signal. From the first buy signal, Tesla rallied 6.20%, and then a sell signal here, and you can see Tesla ended up dropping. All right, maybe one or two more. Morgan Stanley 5-minute chart. Okay, let's just go to, let's see, Friday. That would have been yesterday. Let's just see here. This is 5-minute chart. Morgan Stanley. Right after, look at this. Again, you guys have seen the pattern. Look at this exact pattern. Downtrend, hammer exhaustion. The algorithms came in right away. Morgan Stanley rallies 1.6%. Then we had another buy signal over here. Friday was, of course, is always a bit choppy, so you want to be light on trading on a Friday. Okay. Who thinks this works? Who thinks this could work for you? Can you see how it works? Does it make sense to you? What if you only took, a couple of those trades? What difference would that make? If you, and again, this is not, I'm just excited about this. I wasn't even aware of this one, and of course I didn't take the trade because I wasn't aware of it. That's certainly my fault. But look at SPCE. I mean, again, this is crazy. We got a buy signal. The algorithms comes in and 40% rally. Now, again, this is not typical. I'm not saying the stocks are going to rally or drop 40% after a signal. That's not what I'm saying. But you can see it did happen, right? So that's how that shakes out. So I'm hoping you guys are starting to see how powerful this is. Okay, great. Great. Well, I want to ask you if you also had a scanner for this. How cool would that be? So you wouldn't have to, click around the market all day. So we actually developed a scanner for this that allows you to find these buy and sell signals with literally just a couple of clicks of your mouse. And so essentially, I used to spend a couple hours looking for this stuff manually. Now it takes me, I wrote here less than 20 minutes. Honestly, it's probably more less than like 2 or 3 minutes a day to find these signals. So all thanks to the Beat Your Versal scanner. This is a quote, but I used to also spend a lot of time looking for stuff. That's very powerful. Let's have a look at how it works. We have essentially 2 types of bullish reversals and 2 types of bears. They're exactly the same in terms of probability, and literally with one click, you get them over onto the chart. Let me quickly show you in the real market so you guys can see how this works. So if I were to take Let me just quickly take this down here. I need to make this a chart that links to this, right? So here's, for example, you can see that we have two bullish reversals and two types of bearish reversals. So let's take, for example, I just clicked on Dash. I think people know what that is. You're probably getting some delivered from Dash today. I bite. Anyway, I clicked on Dash, and you can see not only are we getting a sell signal right now, but you can see the last signal was here a few days ago, and since then the stock was up 12, 13%. So super, super simple, right? And again, the algorithm only looks for the qualified signals that have the follow through. That's so important on all this. Make sense? Steve likes it. Yeah. No, and you look at this, for example, this guy, Kevin, he wrote to us, he said he made, you can see with the next 3 days or whatever, he said he made 22,000 bucks. Now, again, I'm not saying you're going to make 22,000 bucks on your first trade. That's not what I'm saying, but I'm telling you, it's possible. People are writing this to us. Look at Rob here. He said he bought this in November. He already made 900 bucks on just 2 of the trades and paid for this 3 times over. So by now, I want to ask you if you found this here helpful today. Yes? Do you think today was time well spent? Do you think that you could use what you have learned today to grow your portfolio and provide you or maybe your family with a better quality of life? And would you like to get results even faster? And let me ask you this as well. Do you want to get bigger results? And would it be okay if I were to show you a way to go even deeper to get even bigger results even faster? So, because today there are some takeaways that I want to make sure that you leave here with today. You've seen how the candlesticks show investor emotions and algorithm footprints, right? That's exactly what we're doing here with this. You've seen how a straightforward and repeatable process is the key to consistent profits as a trader, as an active investor. And we've covered, how you have to understand a little bit of, the broader movements in the markets, but this can be used in all sound ETFs and stocks and commodities. It's very, very straightforward. And I showed you how you can just watch these profits pile up. And so here's what you're about to uncover inside of what we call the Ultimate Candlestick Bootcamp and the B2 reversal indicator, which is those arrows that I just showed you. So what we did is we created the B2 reversal indicator and the bootcamp for the following 3 reasons. So that you have a no stress, repeatable, high probability trading approach, and so that you'll be able to nail reversals correctly and remove emotions using a high probability pattern. And so when you start with this today, with the indicator and the candlestick bootcamp, you start getting the results that you deserve. And by the way, speaking of results, I want to quickly show you some of this stuff. Look at Barry Henson. He made 30.7% in 7 or 6 days. Or look at Ray. He said he made 25% in CCI. Think about what would that mean to you? What difference would that make for you to have the potential to do this? So when you get started today and you're an action taker, 30 days from now, if you're able to say, hey, my portfolio was up X amount, 25%, would it be worth it? Yes. Or how about Thang Do, who says he's out of FedEx for a 28% profit? Or one of my favorites is Andrea, of course. She rubbed my ego, if I would say so. And she says, I don't want to do options with anyone else. And by the way, you could do all these trades if you want to juice them even more with options, right? That's another thing that I want to make clear. But I want you to think about 30 days from now, if you were, let's say, Alan, right? If you were to write, hey, if you could write, hey, UAL, my trade filled automatically for a 35% gain. What would that mean to you? What would that mean to you? What would that look like inside of your trading business today, 30 days from now, if you're able to say, hey, man, I just took a 35% gain, and you could do that time and time again. So today, here's what you're going to get when you get started right now. You're going to get instant access to the B2 reversal indicator. That's the indicator I've showed you here in this presentation. That's going to allow you to find high probability signals, reversal signals that take the other side of human emotions and allow you to trade with the wind of powerful Wall Street algorithms at your back, right? That's really, really powerful. We normally sell this for $1,000 every day. It's on our website, so you can go there and you can go get it for $1,000 if that's all you want. But with the B2 reversal indicator, it also allows you to get these B2 qualified signals flashed on the charts, on the watch lists, right? So you get the indicator that works in all time frames and all asset classes, and you also get the scanner. Isn't that a huge time saver? The biggest commodity that you can't buy is time, but I can show you how you can start getting some of your time back with your trading inside of your trading business, I should say. And that's exactly when you get the B2 reversal indicator today. So you might be asking yourself, what does it work on? Well, you can actually install the indicator on Thinkorswim, eSignal, TradeStation, NinjaTrader, or TradingView.com. A lot of people use something like TradingView.com. You install it there. If you have a different broker like Interactive Brokers or something like that, you can go install it over there. So these are the platforms you can actually install it on: Thinkorswim, eSignal, TradeStation, NinjaTrader, and TradingView.com. So, but listen, like I said, that's not all. So today, not only when you get started, I'm going to give you access to the B2 indicator, I'm also going to give you access to the scanner as well. So that's another $497 of value, bringing total here to $1,494. The B2 reversal indicator will also come packaged with the reversal scanner. So the scanner's main function is that it's looking for the high probability trades, the algorithm, right, that makes it a breeze. And it's not only gonna help you go a lot faster, but it's gonna allow you to speed up the process of finding successful trades, period. So you can also use this for really any type of trading that you want to do. So picture this: you're going into the market, you open up your charts, and you're using the B2 reversal indicator. All of a sudden, all that heavy lifting you've been doing for so long with the scanner is allowing you to cut this time down dramatically. And so you know the direction you're going in, you know you've got an entry, you've got an exit, and you have a stop loss, as you said. So you can now block out all that noise that we talked about, right, that most people have going on. And if all you did over the next 30 days was figure out how to become a master at using this tool, what would that look like inside of your trading and investing business, right? And that's exactly why I created this offer for you today. So when you make that investment today, you're going to get the B2 reversal indicator that we sell for $1,000, and you're going to get the scanner that we also sell for another $500. But for the first 25 people, there's a special bonus I want to give you, and I want to give you the quick start member sessions. In fact, I want to show you quickly because I want you to be up and running very quickly. This is important to me because I know that is what's going to help you fast track your success in the market. Not only do I want to give you the tools today for you to succeed, but I also want to guide you and make sure that you learn how to properly use these tools very, very effectively and quickly. And that's exactly what we do inside of our monthly B2 reversal member bonus webinars. We do these every single month for life. So the total value here is $2,291. We have the next session coming up in early July. You'll get an email sent to you as soon as you become a member, once we have the date nailed down. And I want you guys to come to that next meeting. It's going to be in the next week and a half or so at most. Come meet your fellow traders and members, but also come and learn how to use the B2 reversal indicator and scanner. And we're going to do this we are doing this every single month. So we're going to go into the live market, scanning together, looking for trade ideas. We're going to give you live trade ideas in every single members all we do every single month. We're going to generate different ideas, walk through all those. We're going to go into the trades that I'm actually invested in as well, that I pick, and you're going to get access to all of that. So I'm going to show you a little bit about the philosophy of how I trade and how all that works. You'll learn all the tips and tricks of using the B2 reversal indicator, because that's how, exactly where you're going to see how it works. And I'm going to give you all the fast hacks of what I do inside of both the indicator and scanner. And listen, I know life gets in the way, and so sometimes you can't be there live. So we've got you covered. These things always get recorded. So not only are you going to get the B2 reversal indicator, the scanner, but also you're going to get, for the first 25 people, you're going to get the quick start member sessions that we do each and every month. But on top of all of that, if that weren't enough, I want to also give you access to the actual Ultimate Candlestick Bootcamp video course. This is so important, but why, and why do you want that? Well, here's what you're going to learn. What you're going to learn in the boot camp, and by the way, the total here is $3,288, all this stuff added up. In the boot camp, you're going to learn all the crucial stuff like the rocket launch setup, the gravity pull, and that's exactly what we'll be able to do together and what you'll learn not only in the course, but all in the live sessions, right? These are super high probability zones where this indicator signal tends to show up most of the time. You can start picking all these trades out once you go through this course material that's yours for life access. And that's exactly what you're going to learn in the Ultimate Candlestick Bootcamp. So you can see here, even if at $3,288, this would be a steal. We sell these components of the different things I just showed you here on the website all the time. We sell it at full price because we know people like it, people take them, people know the value of what they can bring, what this can bring to their trading. If all these things were just to give you one trade, they give you, let's say, a 35% profit, would that be worth it to you? Yes, and yes, if all this did for you was to give you that one opportunity so that you can now save your time inside of the market, if all this did was allow you to wake up in the morning, go to your charts, open up the B2 reversal indicator, open up the scanner, and now you have 3 to 5 trades that you can go focus on for that day, would that be worth it? Yes, but look, the reality is you're not going to pay $3,288 here today. If you get started, it's just going to be $297. That's a one-time payment. That's not a recurring fee, and you will be a lifetime member for only $297. Now, it is important that this is only for the first 25 members, and you're going to get those bonuses, all that I've mentioned here for the first 25 members. All you have to do is go to thesteadytrader.com/getucb. And I think Jeanette's going to type this into the chat box if I'm not mistaken. And you should be on your way. You just have to be one of the first 25 people. And Jeff here wrote he uses this every day and it works. He just typed this into the chat box. So look, if you're one of the first 25 people, you can get in and get this all for just $297. I want to just talk about this a little bit more. So here's the review of everything you're going to get for $297 today. If you're one of the first 25 people, you're an action taker, and if you're someone that knows a great investment when you see it, then this is for you. I've been fortunate enough to train literally thousands and thousands of traders at this point, alongside, of course, our portfolio management, money management business. There's one key element that I see that leads to success, and I see this time and time again. There are people that are willing to take action, and there's people that are not. And it's no different in the market than it is in life. The question is, are you someone that waits on the fence and says, oh man, I'm gonna wait until the next time. I'm gonna wait for the next step. I'm gonna wait for the next step. And then of course, sure enough, that opportunity passes you by. It's not about making the wrong decision or a right decision. It's all about making a decision, period. And that's the opportunity that you have here today when you get started. Right now, I'm going to give you the Ultimate Candlestick Bootcamp so that you have educational material, fundamental key learning, so that you can integrate this into all of your trading across the board. But I also want to give you one of our top tools and scanners. It's the B2 reversal indicator and scanner, which just showed you here over the past 40, 50 minutes. You're going to get lifetime access to all of that. And if you're one of the first 25 people, I'm going to give you access to our quick start member sessions. The next session's coming up here in just a week and a half or so. You guys will be emailed as soon as we are all set on that. But it doesn't stop there. We're going to give you access to all those sessions for you on a monthly basis, and you can come back each and every month so you can start seeing how we do this live in the market. We're going to be there live in the market with you. I'm going to get you up and running as fast as possible with the indicator and make sure that you start getting on the path of generating profits that you deserve. We sell these components for, like I said, $3,300 all the time, but we're going to get you started here today since you've made this investment and taking an hour with me today on a Saturday. I want to give it back to you. And so for just $297, you can get started right here, right now. It's a no-brainer. So let's talk a little bit about who this is not for. This is not for traders that cannot be patient and disciplined in their approach. This is not for traders that are looking for someone to tell them exactly what to do, when to do it. So this is really meant to be for people who want to really actually make this work in the market. If you're serious about it, if you believe You want this to be something that's another source of income, or maybe even the primary source of income for you, then this is something you definitely want to do. Look at this gentleman, John. He signed up in late May for the for the beach reversal indicator, placed his first trade. He made $2,800 and he still has $4,000 on the table. So, you know, this really, really, really is nice to see the difference we can make in people's lives when they come in and start sending us stuff like this. Brian here wrote us another nice testimonial as well. But look, the reality is, I'm going to quickly go back to this here. I'm going to just quickly take a second sip of water. I know we're 25. I think we're down to like 4 spots, if I'm correct. No, 7 spots. So that's everything you can get here. I want to make sure we address any more questions here. The July bootcamp is going to be at some point in the next week, week and a half. You guys have full access to the all the recordings as well. So when you get to the website, it's super, super simple and straightforward. You'll be able to just go right to it. Indicators, you click on Beat Reversal Indicator, you'll learn how to install it. You can also see all the recordings of the past members webinars. They're all there. Everything for you to get going. Perfect. Again, all you have to do is go to thestudytrader.com/getucb. For the next 25 people, it's only $297. The full boot camp, the indicator, the scanner, lifetime access to all this for the next 25 people. And let me see if there's any last questions. I think we are good here. Excellent. Yeah, I think we're just about up with the slots. There's a few left, so if you want to get it, do it as soon as you can.
Serge, does it work on TradingView? I don't think it does.
Yes.
Does it?
Yes,
oh, it does.
Mm-hmm.
Okay. All right.
Yes,
That's
you can.
Asked. All right. And do you have dates on the boot camp in July?
Yeah, it's gonna be at some point over the next week, week and a half. Like I said, I just answered that question. All the past recordings, we just did one literally on Tuesday this week, so they're on the website as well. But you know, we do them all the time, so it's going to be soon. And as soon as we set the date on Monday, we will send out let people know when that next one is.
Got you. Okay.
So cool. Nice to see all you guys come on here. Yes, it works on currencies. Sure. It's just another market, right, that algorithms operate in. Yep. Jeff says Jeff sounds like he's a member. He says it's great to be learning in those webinars as well. Excellent. That's like a life testimonial. That's nice. Thank you, Jeff. Appreciate that. Perfect. All right, guys. Well, listen, I'm going to pass it back to you, Jeanette. Thank you so much for putting this on, and thank you all for taking time out of your Saturday.